Hello guys, uh, let's start the review of Nifty 50. Before that, let's see the daily chart if somebody is interested in it. So this was leg 1, pullback, and a leg 2, and the leg 2 was a bear channel. If I have to draw the channel, there are a lot of drawings here. Ignore those for now, and if you see this channel, this was a slight overshoot of that channel, and then we reversed up. We broke out of the channel top line. So now it's acting as a major trend reversal setup. But that said, we do have Trump's decision overwhelming the market. So we'll have to wait and see how this retraces. Although this is a huge gap and gaps act as magnets, it might retrace all the way here in a few weeks or months, or maybe even days. Nobody can tell you that, but most likely it's just going to be a trading range for a while, maybe 6, 8, 10 months, and then we will have to see. Okay, the entire day has been a trading range day. Why do I call it a trading range day? If you see the opening bar went up all the way here and then it pulled back and then it printed a leg 2. Then bears got their leg 1. Although this is a weak leg 1, pull back this entire range as a pullback and then leg 2. Big up, big down. So big confusion is a hallmark of trading range. So you will expect trading range price action for the rest of the day too. That said, on the daily time frame chart, if you see, this is a strong closing bull bar. But on the 5-minute time frame chart, you can see that the whole day has been a trading range day. So what about the bulls who entered one tick above this bull bar? They can place their stop losses either one tick below the signal bar or the first bar of the day, hoping for a scalp up. But then if you see, they're yet to get the scalp. I don't think they'll get the scalp today. It's 3 minutes from closing. So what could have they done? They could have either scaled in here for hoping for a break even or some small profit. Why could they scale in here? Like I said, this is a trading range. Leg 1, pull back, leg 2, leg 1, pull back, leg 2. And here, if you see, this was an attempt at major trend reversal. Although this has been a very strong micro channel consisting of 9 bear bars closing near their lows. This is a trap. Why? Because in trading ranges, usually the second leg will have a strong closing or strong looking bars, be it a second bull leg or a second bear leg. Why it acts as a trap is because on the lower third region of the trading range, people usually enter on limited orders, hoping for a scalp up to the top third region. And the same goes on the top third region. If it's reaching the top third region of the trading range, people will be entering on limit orders, hoping for a scalp down. So this was a strong reversal up or attempt at reversing up. Then you can either enter here one tick below this bar. I wouldn't, because this is happening after 3 strong closing bull bars consecutively. I would rather wait for a L2 short. It didn't occur, but then if you see, this also corrected leg 1, pull back, leg 2. So this is a very good entry for a major trend reversal, and you can swing it all the way up to the top of the day. It did reach there, but it's up to you. It's all the major trend reversals will net you 40% win rate, and you should be swinging it. So it's better to have a profit target either here or here or here, or just a 2 hour and you get out of 2 hour. If I have to mark the 2 hour. So this is your 2 hour and you get out there. Okay, so let's discuss all the trades here. Would you sell this bar? I wouldn't. Why? Although this is a trading range and you know it's a trading range, today was a huge gap down, almost 1000 odd points, and I would rather wait for the price to reach the EMA and then give me a setup where I can trade on the downside. Or if it reclaims the EMA and gives me a pullback structure there, I could hope for a long trade. So this is not a good entry for me. If you want, you can scalp here, hoping for a wedge bottom, like price try to move higher once, twice, and this is the third time. Although this is a doji bar, it's okay to enter here. I wouldn't. I would rather enter above this bar, one tick above this bar, place my stop loss here or here, and hope for a scalp, or wait for a test of EMA and then to exit. Why test of EMA and then to exit? If bulls were all that strong, the first bar of the day wouldn't be such a weak closing bar, and the follow through bars should be printing if bulls were all that strong. But if you are seeing of a good strong closing bull bar, then a weak doji bar, then a good strong bull bar, then a reversal bar. So this was one scalp, and even in that scalp, if you see again a wedge top, 1 2 3. Why would I mark this as the point initiating the wedge top? Most often than not, if you go see wedge patterns, they will begin one leg before the starting of the actual pattern. What do I mean by that? If you come to a lower time frame, okay, now you can see the leg up started after you see this leg, right? If you're somewhere here, you're still in a downtrend on 1 minute time frame chart, that is. So this was the fresh leg up. This was the second leg and the third leg. You can call this, you can mark this as a wedge top instead. First point, second point, and then a wedge overshoot. So within 5 bars, it might reverse, and you got a micro double top here. You sell one tick below this and hope for a scalp. Why a scalp? If it has high probability, or you can wait for a swing down to the starting point of the wedge. It's a personal choice. Either one works. It's up to you. But why would I mark this as the first point? Like I said, before the bull leg begins, the traders will see this as the wedge starting point. It's just how it works. If you see visually also, this forms a much better wedge. Why? If you mark this as 0.1, 0.2 and this as 0.3, the number of bars between 0.1 and 2 and 0.2 and 3 is very different. It should be at least similar. Here if you see, it's similar. But here if you count, this is like 12 odd bars and then 5 bar on the second point, from second point to the third point. So that's not how wedge pattern usually works. So it's better to mark it out where 0.1, 0.2, 0.3 are somewhat equally spaced and the number of bars between them are also similar. Okay, now you got a wedge top here. Would you short this? I wouldn't. Why? Because EMA is yet to catch up. It's better to wait for another shorting pattern. It came by here, but if you see, this was a bull doji bar, so I would rather wait for a bear bar closing near its high and then short one tick below it. So here is where you get in and place your stop loss here or here. Few people will place their stop loss here because it's a trading range and it can retrace all the way up here and then fall give their profit. But it's rather good enough to place it here. Okay, then we got 1, 2, 3 bear bars closing near their lows. The second bar was a weak bearish closing candle. If you see, it's a huge tail, but is it closing below its 50% mark? It is. If you see, this was the low, this was the high, and it is closing below its 50%. So that's a good setup to trade. I have told you previously that if leg 1 has 3 breakout bars, it's a good thing to have. But in the leg 2, if you see 3 consecutive bull bars or bear bars, it is better to avoid those. But here if you see, we are in a trading range. Keep that fact aside. Think of it as this entire region as a trading range, not the bigger one. Let me mark it out for you. Somewhat this region as the trading range. Here if you see who is stronger from here to here, because bulls are strong, so our base here, you get a strong bear bar, then a weak follow through, strong bull bar, weak follow through. So they're equally balanced. If your argument is that, look at what's happening here. Nowhere in this trading range you have found three consecutive bars closing near the lows. So this is a good shot for me. Why? I will see this as the leg one, fresh leg one, which is yet to form when we are within this trading range. It's signaling me that there is selling pressure. So you enter on the close of this third bear bar and hope for a scalp down. I wouldn't swing because still we are in a trading range. We can see this is 1, 2, 3 consecutive bull bars closing near their highs. But if this bar had closed above the EMA, this would have been a very good entry. Why I need it to close above the EMA is because once it closes above the EMA, the attempt at reversal will be much stronger. I'm not saying it won't work if it's closing below the EMA. It's just that the odds will be a bit more in your favor. It's even better if it closes a gap bar above this moving average. What do I mean by a gap bar? Suppose it prints a entire bar here above the EMA and it has a wick of say this length. Assume that this is a gap bar. There is a gap between the EMA and the low of the next of this candle. So this will be a moving average gap bar. Why is it important? It's important because it's showing you or it's telling you that bulls have enough strength for an attempt at major trend reversal. Yes, this is also an attempt at major trend reversal, but that would be more strong. You can either get out at 2 hour or somewhere on the high of this bar or the day's high. Anything is a good profit target. It's better to swing it, meaning you have to place your move your stop loss accordingly. Once you enter here, after you see 5 consecutive bull bars closing near their highs, you can still buy anywhere at this point. If you see, I have marked this bar also as an entry bar. Why? Because 1, 2, 3 consecutive bull bars closing near their highs. This is again closing above 50% mark. So this is a valid structure or a valid pattern. You can enter on the close, put your stop loss here and hope for a measure move. Then you're scalping. But here, when you enter on the first bull bar, you're still swinging. Never convert your swings into scalps. So now, after you see this fiber bar bull micro channel, you wait for a pivot to form. Where is the pivot? I don't see any pivot. Why? Because this is a tight channel. If you may, let me mark it out for you. Can you sell here and make money? No, you can't. Can you buy here and make money? In a way, you can. Why? Because you know this leg will have a second leg up because it's a trading range. Leg one, pull back, leg two, leg one, pull back, leg two. This is a major trend reversal attempt. Then it is back to the low and a major trend reversal. So this is leg one, pull back, leg two. So since the overall odds are in the favor of bulls, you can buy anywhere here and hope for a leg up, second leg up. We did get that. So if you buy anywhere here, once you see 1, 2, 3 bars closing near the highs, you move your stop loss here and you're reaching the end of the day. It's better to get out at the day's high, which was here. One tick above it, it did reach the day's high. Then you see bulls taking profit. That is why a small pullback and then price headed higher. And that's it, guys. Thank you.